What's up, everybody? Welcome back to Earn It, Save It, Invest It. This is week 29 of my $100,000 challenge. So I'm trying to take $7,354 and make it into $100,000. So this is week 29. I'm going to go over what's happened over in the stock market. This is the end of December, so I'll kind of break down what's been going on over the year, what I expect over the next year. I started this challenge June 2nd of 2025, so I've had just about 6 months of being able to do this. So I'm going to go over where I'm at and what I'm doing. So please give a like and subscribe. I really appreciate it. And I'm just going to go over this really quick. So currently, week 29, I'm at $8,546. Let me see. So I was up about 1% on Friday, but in total, not that much for the week. I'm holding $996 in cash, which is just over 11%. That to me is a little too much, but I plan on buying this week, this upcoming week, which is Christmas week. I know it's like I'm gonna have less days, but I might be able to pickpocket some spots. I also think that we could be in a little bit of a spot where the market could go down a little bit. So I'm not trying to really spend too much cash right now, but 11% is a little heavy. Nonetheless, I have bought a few stocks at some discounted prices, right? So right now my major holdings is TQQQ. I believe when the market goes down, this is going to go down really heavy. I mean, it has to. It's a 3x inverse. So whatever QQQ does, this is going to 3x it. So if it goes up 1%, this goes up 3. Down 1% for Qs, then this goes down 3. So once the stock market does hit a 10, 15% drawdown, this is going to go down 50% or more, right? So I do expect this to go down significantly, and I will be buying. I will be a buyer. I think this could hit my cost basis. I do believe this could hit back to my cost basis for a short period of time. HIMS, again, also one of my top weighted positions. I talk about HIMS a lot. I sold 10 shares that at that time was 20% of my holdings at $58, right? At the end of, it was either at the beginning of October or at the end of October, but it was right before it started to just slip and go down. I said, look, I don't think HIMS is going to have a good few months. I'm going to sell some of it, and I'm going to put that money into something else. And I did buy some Adobe, which, as you can see, my total change is only about 4%. But that's better than having that money tied down into something that went down a lot, or, at least having some cash ready to deploy. Right, then I have Meta, Celsius, Amazon, Fubo, Nike, Adobe, and Hesai. Nike just went down pretty heavily. It went down 10% on Friday. Earnings came out. They're just not doing as well. The turnaround story is not, doing as well. China, tariffs, that whole thing is still kind of holding them down. And so it went, the stock went down 10%. So that's, I'll pull up the chart here in a minute, but that's pretty low. It's gone. I think it might be at its bottom. I think it's at its bottom ever since it hit its top, right? It went to its peak. Right now it's at the very low since over like 6-7 years, maybe even 10 years. It's pretty insane. So for the challenge, I'm in week 29, right? So I wanted to have $9,664, but I only have $8,546. Again, that is a lot to do with HIMS. I started this challenge with HIMS at a very high price. It was higher than what it is now. So I already knew that's going to be very volatile. I do expect HIMS next year to run up and stay. Once it hits 50s, 60s, I do expect it to kind of stay there. But that's going to be maybe in 6 to 12 months. So the weekly change, I didn't really do much, right? I had 85.76. Now I'm at 85.46. So not much of a change for the week against the goal. I'm actually, since I went down a little bit, I'm even further away from the goal than I'd want to. It is 6:30 on a Saturday, and there's no way that if you guys can hear this ice cream man, I feel like there's an ice cream man outside. This is, I don't know where I'm at. I live in Los Angeles, so 16% I'm up since I started this challenge, June 2nd. But if you just take out all my deposits, right? I've been making $50 deposits every week. Really, I'm down 2%. So this again shows you need to be making deposits every week, and it keeps your balance, keeps your portfolio going. And again, I still have $900 cash, but I'm going to use that, right? 50 times 29. Well, I've put in, about almost $1,500, right? 1,450. So, so of course that $900 is some of stocks I sold, like HIMS, and some other stuff that I've kind of adjusted a little bit, but yeah, you want to have some of that money and cash ready to deploy when things go bad, because there has been some stocks that have gone down. AAII Sentiment, last few, look at this. This is Hollywood. This is holiday, right? This is holiday time. Look at this. No one wants to do anything. They just stay bulls, and no one really wants to move anywhere, right? Right here we lost a little bit of bulls, a little bit of neutrals, and they all went to the bearish side. So that's kind of weird, right? It's kind of weird. The Bears are the only ones that gained, so that's interesting. The question, a little weird, how has the rise of passive investing, the index funds, affected your investing strategy? I feel like index funds and ETFs have been around for a while, so I don't know exactly what specific, why they're asking this question, but most people they use a mix of investments and haven't changed their approach, of course. I've moved more money into passive investments, another 30% hasn't affected my strategy. That's whatever. But fear and greed, again, we're still neutral. It's this holiday time. We're not going to move anywhere. Next year, beginning of January, Wall Street gets back into it. People start trading. Things start happening again. This needle will move. It's going to move left or it's going to move right. It's going to move to one of those directions for sure. So I'm going to go over some of the stocks. Now this is Nike. Nike just had a 10% drop. Right, let's go down. Let me just do a full single here. All right, so this is where Nike is right now, right? $58.71, so just under $60. Oh no, actually, sorry, it went under this. Wow, yeah, that was for the tariffs. Okay, so it did reach this in April, but we are now again past the COVID lows. It has been 2,954 days since Nike has had these types of prices, essentially, right? If you want to talk about since April, that time it was 2,700 days, right? We're looking at a long period of time for a stock like Nike to be going down. It has been going down officially for 1,500 days. Not straight, obviously, right? It's had a couple times where it's gone up, but 1,500 days, and it's gone down 66%. That is insane. So, you got to look at some of these, an Adobe, right? Obviously, in that same time frame is performing better, right? But if you look at the 5 years, it really hasn't done much. And over the last, since it peaked over here in January 2024, so now we're talking basically in 2 years, this stock has gone down 44%. Right, so stocks like this, you might want to think about getting into, because they're not starting to drop. They have dropped and been dropping significantly for a very long time, right? Let's go back to Nike. They're beating earnings, right? It's not like they're missing, right? They're whatever the projections are putting out. Now, again, sometimes the projections aren't exactly what people want to hear, but they're still beating their earnings, right? They're beating their earnings. They're beating on revenue. So it's not like, oh my gosh, they're missing everything. Same with Adobe, right? So they're meeting or beating expectations, right? There's no reason for these stocks. Well, I'm sure there is reasons, right? There are reasons for stocks to fall. But there's also going to be just as many reasons for the stock to rise as well. So you have to think about that. Which stocks look like kind of like falling knives a little bit? Even HIMS, right? You look at HIMS, you're like, oh my gosh, this thing it's gone up so much. Let me do that, right? It's gone up so much, but when you look at this part of HIMS, it really hasn't. In the last, let me do 1 year chart. I mean, in 1 year it's gone up a little bit, but since its peak and all of these over here, it's continued to trend down. But Hims is continuing to do well now. Yes, has a couple misses right here, right? It's had, like, this was Wegovy and stuff. We've had some issues, obviously, with, or is that more over here? That might have been over here, for the Wegovy. But they are still doing very well with their business, right? Now, look, they beat on earnings 12%, and their revenue is just down 1%, right? But their earnings were up 12%. Here, they were down 36%. They had a lot of issues, obviously, on that one. But they're not just losing money hand over fist. They're making investments. They're doing all kinds of things. So that's the issue, is that when these things happen, people freak out and the stocks go low. So these are times to catch them, maybe. So that's just my 2 cents. Oh, and even Celsius, right? You look at a Celsius, right? This one went down all the way down to 21, from 95 all the way to 21. Then it bounced back up to 65, and then it dropped back down to 38. And now it's at 42 currently, right? It's kind of in this midpoint. It's actually closer to the bottom than it is to the top. Celsius is a really good stock to be looking into. It obviously has momentum. It came down after missing some earnings, but Celsius is another crazy, like, these are companies that, when you have high growth companies, they're going to have crazy things happen, right? They're going to miss big and then they're going to hit big. That's going to happen, and they're going to have different reasons. All it takes is it takes something smaller. Something smaller can hit these companies and make a bigger impact over an Amazon and a Meta, right? Something hits these companies, right? They have, so like for Celsius, right? They had distribution, and they were having distribution issues and inventory issues. And so that's what really pushed the stock all the way down. But it's not like the business itself is going to be bad. So you have to just figure out, well, why is it going down? And is this going to sustain a long way down? Now, granted, if you had bought Celsius over here and you're like, wait, I read the news, but it's still going to be fine, and you bought in the 70s, you're probably kicking yourself, right? You're like, look, maybe I want to see how far this can go. You just never know. You just never know. But I saw this thing as it was falling all the way over here, and I picked up a bunch of shares at this point. In this account, I think I bought around here. So I'm doing okay, but I still think I'm going to be doing really well eventually. So again, that's just my... my 2 cents. What are we doing here? All right. That's just my 2 cents and my week 29 update. It's been kind of crazy with me. I work in sports television, so I've been really busy. I've been dealing with family, right? So it's been a crazy month here. And same with the stock market. In the last month or two, it hasn't done very well. Actually, let me just take a look really quick. Let me show you. This is QQQ. In the last 51 days for the stock market, right? In the last 51 days, it's gone down 3%. So even though, yes, the stock market has done pretty well over this year, in the last 51 days, almost 2 months, we're down 3%. We were down a lot more, right? We were down almost 8%. We're down about 7%. So, we could still have more drawdown in the beginning of the year. Maybe there's more questions, what happens with the Fed? There's just all kinds of, anything can happen. Trump can tweet something and send the stock market down. He could tweet something and send the stock market up. We don't know. So find good companies, profitable companies, valuable companies that you feel that are just going to continue to grow. And yeah, so that's just, again, that's officially my 2 cents. Please give a like and subscribe. I'd really appreciate it. And don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.